Hi, welcome back to 701 Chain FinTech for Financial Institutions. We are down in Las Vegas, Nevada at Bitcoin 2026. I'm here with Dhruv Bharagava, who is a digital asset auditor manager at Crowe.
Yeah, I think the themes have been, consistent with years past. One of the things that really stood out is obviously this is a convention and a gathering of the community. So there's kind of crossover between topics that you might not necessarily associate with Bitcoin specifically, right? Something that comes to mind is a lot of talk about stablecoins, kind of the transition and traditional payment channels to this new migration of decentralized finance. Lots of talk about mining and data centers, energy, right? I think that kind of correlates with another trend in the tech industry in general, which is development of AI, kind of widespread adoption of AI models and AI tools. And then one of the things that I'm personally interested in, and I've spent a lot of time looking into with these sessions here, was just the focus on quantum and kind of how we quantum proof the blockchain, specifically Bitcoin, right? And come to that agreement as a community.
No, absolutely. And it's been nice to hear the industry being proactive on this whole quantum issue. And I know quantum kind of ties, around Bitcoin, or at least the mainstream media likes to bring Bitcoin and actually tie it to quantum. But quantum's a threat just throughout basically every industry. Correct?
Yeah. I mean, cryptography in general, right? Cryptography secures the foundational technology that underpins every industry, anything from traditional finance to your email to your health records, right? That's all secured by cryptography at some level. A quantum computer theoretically would have the capability to break that encryption. And so that's kind of the fear, I think, in general, amongst just security researchers and the security industry in general, is how do we migrate systems in a safe and thoughtful manner? One of the key differences with Bitcoin is to make any upgrades to Bitcoin Core, which is what this would require. There needs to be a consensus, right? Everyone needs to come to an agreement. And there's been a lot of conversations that I got to listen into at the conference here that people have talked about, what do you do with frozen assets? What do you do with people that don't want to move their wallet, right? Or migrate their assets? So that's one of the things that makes it unique on the Bitcoin side. But yeah, you're absolutely right. Every industry will be affected at some point. It's not a matter of if, it's a matter of when.
Are you guys seeing a lot of interest from financial institutions on with blockchain technology?
Yeah, absolutely. I think that, if you'd asked me that question a couple of years ago, the answer would have been it was a buzzword that got tossed into presentations, investor decks, whatever you want to say, right? Publications. I think that the change in the regulatory environment has created the positive changes in the regulatory environment have created a space to where a lot of organizations and institutions feel comfortable now, right? Seriously thinking about how do they incorporate this new form of technology, new payment rails, new stable coins into their ecosystem. So we've seen a lot of where, some organizations are going to be slower to adopt it. And that's not a lack of them wanting to adapt or anything. It's just they have to deal with the regulatory agencies that are unique to their industry. But I also think that the technology companies are going to come in first, and you're seeing a lot of de novo banks. You're seeing a lot of fintech companies that are coming out, building products fast. They're breaking barriers, and a lot of banks or financial institutions tend to kind of follow suit there. And once there's a adopted and mature technology in the industry, and they feel comfortable going down that route, I think you'll see much faster adoption. But for now, it's a lot of exploratory conversations, a lot of how do we do this safely? How do we do this in a thoughtful manner? How do we make sure we don't rush it and create additional exposure and risk in trying to catch up with something or trying to adopt something, that's fairly new?
No, absolutely. It's been interesting. Obviously, with being at Bitcoin 2026, you would expect most of the discussions to revolve around Bitcoin.
Yeah.
But this year, the theme has been kind of around stablecoins. And so help our audience kind of tie stablecoins together with Bitcoin. Why are the discussions having a large overlap?
Yeah. I think a lot of it has to do with the change, again, in the regulatory environment, right? New administration, a new SEC chair. There's just been a lot of change that has happened in the last 12 months. And I think this has been the first major opportunity for people to get together and kind of discuss that. The concept of stablecoins is unique, right? Because a lot of them do exist on EVM chains like Ethereum, Solana, different blockchains that aren't Bitcoin. Bitcoin is a UTXO chain, which makes it a little bit more difficult for stablecoins to work. Not that it's impossible, but I think that the overlap in conversation is also because there's a large overlap in the community. So the same people that are looking at potentially holding digital assets on their balance sheet are also looking at how do we incorporate stablecoins in our day-to-day monetary transaction flows. And that's naturally going to lead to those conversations happening in the room, right? Nobody's forcing anybody to be here and have a specific conversation. It's more so, what are we doing as a community to move this whole thing forward? And then how are we going to do it safely? How are we going to think about, making sure that we're all working together to make it happen? Because you don't want these isolated pockets of different stablecoins and different tokens, different cryptocurrencies appearing and then kind of breaking the whole financial system that exists today, right? That's nobody's goal is to do that. Everyone wants to make sure that we're aligning with what we already have and making it better, if anything.
No, absolutely. Another thing that stood out to me is, speaking with a few institutions around here and their pipeline being full with financial institutions calling them and asking for crypto as a service.
Yeah.
Can you help explain what crypto as a service actually is?
Yeah, so I'll go back to talking a little bit about the tech side, right, where we were talking about who's adopting things a little bit faster. I think that, again, there's a lot of technology companies, and walking around the expo hall, you and I both saw there's tons of products out there. A lot of them are designed for retail investors, people that just want to kind of buy Bitcoin, hold it, they're enthusiasts. But there has been a huge uptick in companies, like you said, coming out and designing and creating products that fit the regulatory needs and also fit the technical needs of financial institutions and other organizations. So crypto as a service, I think, is going to be something that grows rapidly. You have a lot of companies that are doing stablecoin issuance on behalf of another financial institution, and that's purely because they have the tech side of it, right? They have the tech stack. They're willing to maintain it, take on that risk, and then they're giving that opportunity to say, hey, if you're a financial institution, but you don't want to hire a team of 30 developers and build your own smart contracts, your own custodial wallets, here's a service you can buy, right? Wholesale, and now you have a stablecoin. So, and that's not, just for stablecoins. I think there's companies out there that offer custodial services, wallet services, private key management services, right? That's just kind of an opportunity, again, that was in the market space. You have third-party risk, right? At every institution has third-party vendors. So again, taking that exposure of saying, if you don't understand every risk about the blockchain, here's a company that has done the research and, designed a product that meets those risks and addresses those risks for an organization like your financial institutions.
No, absolutely. Historically, and even up to this year's conference, there has been that debate within the Bitcoin ecosystem as, all right, well, is Bitcoin here as that true preservation of wealth, or quote unquote the digital gold, or is it actually here for transacting in everyday business? And I know since stable coins were passed into law through the Genius Act and actually bringing them to the institutions, I think that has kind of shown now a clear winner between the Bitcoin ecosystem as saying, hey, Bitcoin isn't really here for everyday transactions. We have a better solution, which is stablecoins.
Yep.
As far as a digital asset, but knowing that stablecoins themselves, are stable to the U.S. dollar. They're not going to be great for preserving wealth. But
right.
Historically, you start looking at Bitcoin as a whole. Are you seeing Bitcoin being more institutionalized and actually supporting that narrative of being the digital gold?
Yeah, 100%. I think that, again, going back to, I probably said this 5 times already, but the regulatory changes, right, made it easier for companies to hold digital assets on their balance sheets and invest in them, create investment products, right? Great session, yesterday with Michael Saylor, where he talked about how do we take out the long-term risk, right? Right now, Bitcoin is so volatile that it only makes sense if you're going to hold it long-term. A lot of companies can't do that. A lot of people don't want to do that. So, their MicroStrategy has created a product called Stretch, and that kind of takes out that volatility by creating a credit product on top of Bitcoin as an asset. So to go back to your original question of can Bitcoin be used as a form of payment? Absolutely. I think it's just much harder to actually institutionalize that and make it widespread and accessible. So that's where you're seeing these companies come in and offer the ETF products, offer other types of products to get exposure to Bitcoin without actually having to, use it as a day-to-day way to kind of store, like you said, value and money. I think that Bitcoin will obviously always exist. It was the kind of OG, right, original crypto asset. It's kind of, I'd say, a blue chip of crypto assets. What we're probably going to see is that, stable coins are going to be used as that faster way to move money, faster way to settle payments, whereas Bitcoin will be that long-term store. But again, it's kind of akin to gold, right? At some point, the US dollar was backed by gold, but nobody was going out and actually mining gold and then holding it in their house for every dollar they had. There was a system in place. And I think you're going to see that same thing happen in crypto eventually. Might not be there yet, but it's kind of starting to build it out that way with institutional adoption.
You touched on ETFs, right? Mm-hmm. And you look at, BlackRock's ETF, Morgan Stanley's ETF. There's some talks that Goldman Sachs might come out now with their ETF. But you look at specifically BlackRock and Morgan Stanley.
Sure.
Their Bitcoin ETF is the most successful ETFs both of them have launched, to date. And what does that say about Bitcoin?
I think it again says that institutional interest, right, just grew in the product, and as people felt more comfortable with the changes around the regulations and the regulatory clarity that came, it made it easier for people to hold that on their balance sheets. It made people maybe more comfortable to hold it in their retirement accounts. I haven't really looked into the flow of where that value came in from, where the investments came into those two ETFs specifically. But yeah, it's everyone has a Bitcoin ETF now. People have Ethereum ETFs. You have companies that act as, digital asset treasuries, and they take all their cash on hand and invest it in some sort of crypto asset, similar to what Michael Saylor's done with MicroStrategy. So I think that there's a lot of institutional desire to hold digital assets without, again, building all that infrastructure on the back end to say, here's how you custody, here's a wallet, here's a private key, here's how you sign transactions. Nobody really wants to deal with that. They just want the exposure to the actual underlying asset. And that's where these ETFs are great products. And I think that's why they've been so successful.
No, appreciate the summary of that. Is there any last comments or a few extra points that we haven't covered that you'd want to touch on?
Yeah, I think that one of the things, again, one of the themes from this conference that's really stood out to me has been, it's cool to see the convergence of more than just, a bunch of nerdy developers that enjoyed a Bitcoin 10 years ago. I think the community has really grown. And the idea with Bitcoin and all crypto is always to make finance and decentralized finance accessible to everyone, right? So at some point it used to be a scary thing because it's all code, but at this point in our lives, what isn't? And so seeing everyone come together from different backgrounds, from different industries, from different organizations has been really cool. And I think that as adoption continues to increase, in whether it be in stablecoins or Bitcoin or any other cryptocurrency, just blockchain adoption in general is going to open the door for a lot of new products like we've already seen, now a lot of new financial instruments, probably a lot of things we haven't even thought of. And I think that there is no rush, right? I don't think that anyone listening to this podcast should feel rushed to adopt this thing immediately. Everyone has said at this conference, we're all still super early. We're ahead of the curve, right? There's not that many people that hold Bitcoin or understand it truly or know it. But I do think it's worth exploring and at least having those conversations, maybe educating yourself, and without having to do a deep dive on the code, right? You don't have to go read Bitcoin Core, the Satoshi's white paper. Just watch a couple of videos, listen to this podcast, listen to the next couple episodes you have, and I think you can gain an appreciation for what can be done in this space and how it can be used. And that's kind of the whole point of these conferences, is to make Bitcoin and crypto accessible to everyone. So that's where I think I leave it.
Yeah, you touched on the education, right? And that's why both you and me will actually be at Consensus next week
Right.
down in Miami. And, the Bitcoin's the one, obviously the blockchain that everyone knows about.
Right.
But then when you start looking at other blockchains for other utilities or other ways to technically utilize a digital asset, you start looking at tokenization.
Yeah.
You start looking at tokenizing real world assets, AI agents. I know both you and myself will be busy with Hederagon, Solana Accelerate, Sui Live, just to name a few, and definitely look forward to seeing you next week.
Yeah, I'm excited. I'm excited to see the space continue to grow, do more of these things, get the word out, and help people feel comfortable using this technology. So it's been awesome. Appreciate it.
Yeah, no, it's definitely one of those areas that you can't learn at once and just be done learning.
Absolutely.
You've got to continue to educate yourself. It's moving so fast, right?
Yeah.
Thank you very much for tuning in to 701 Chain. Again, I'm Michael Lehn. Please like and subscribe, and we'll see you next time. This recording is for informational purposes only. It does not constitute legal, financial, or investment advice.
The views expressed are those of the hosts and guests and do not represent any organization, including Bank of North Dakota. Please seek professional guidance before making financial decisions.